How to survive a market crash. 7 steps to protect your money. Did you know that in the last 100 years, the stock market has crashed more than a dozen times? Each time, millions of people lost their savings and jobs, but some came out wealthier than before. The difference was preparation. So, the real question is, are you ready for the next crash? In this video, we are going to explore 7 proven steps to protect your money during a market crash. From inflation-proofing your savings, building emergency funds, diversifying smartly, to creating side hustles and investing in safe assets, these steps will not only shield your finances, but also help you come out stronger when the dust settles. Step 1. Understand inflation and its impact. The first step in surviving a market crash is to understand inflation. Inflation quietly eats away at your savings. Even if the market doesn't crash, inflation means your $1,000 today might only buy you $800 worth of goods in a few years. In the 1972, the United States saw double-digit inflation, and people who kept cash under their mattresses lost massive purchasing power. More recently, in 2022, inflation hit record highs globally. Food, fuel, and housing prices skyrocketed. Solution: instead of holding too much idle cash, park your money in inflation-resistant assets, like Treasury inflation-protected securities, index funds, or even real estate. You can also look into dividend-paying stocks, which often provide steady income even when markets are volatile. These options help your money grow instead of silently shrinking. Step 2. Build a solid emergency fund. During a crash, jobs can vanish overnight. In 2008, millions lost employment as companies collapsed. If you don't have a financial cushion, you may be forced to sell investments at a loss just to survive. Think about this. If your monthly expenses are $2,000, having an emergency fund of at least $12,000 means you can cover half a year without stress. That peace of mind is priceless when everyone else is panicking. Solution: create an emergency fund worth 6 to 12 months of living expenses. Keep it in a high-yield savings account or a money market fund, liquid, safe, and accessible. Avoid tying it up in risky assets. Think of it as your financial oxygen mask, something you put on first before you help anyone else. Step 3. Diversify your investments. One of the oldest lessons in finance is, don't put all your eggs in one basket. Yet many people still do. In 2000, during the dot-com bubble, investors who went all in on tech stocks lost nearly everything. But those who diversified across bonds, gold, and real estate managed to soften the blow. The same lesson repeated in 2008, when real estate collapsed but long-term government bonds provided a cushion. Solution: spread your money across different asset classes: stocks, bonds, real estate, commodities, and even international markets. You don't need to be everywhere, but you do need balance. When one area falls, another may rise. A well-diversified portfolio isn't just safer, it's smarter. Step 4. Keep some safe assets. When markets crash, panic selling hits stocks the hardest. But historically, gold, U.S. Treasury bonds, and cash reserves have acted as safe havens. For example, in the 2008 crash, while the S&P 500 dropped nearly 50%, gold prices rose significantly as investors rushed to safety. Even in 2020, when COVID-19 shook global markets, government bonds and gold held their ground better than volatile stocks. Solution: always keep a portion, maybe 10 to 20% of your portfolio in safe assets. These give you stability and liquidity when everything else seems unstable. Cash reserves also allow you to buy undervalued stocks during downturns, which is how many investors turn a crash into an opportunity. Step 5. Develop side hustles and extra income. One of the most powerful protections against a market crash is not just where you invest, but how many income streams you have. In 2020, when the pandemic shut down entire industries, people with only one source of income struggled the most. Meanwhile, those with side hustles, like freelancing, e-commerce, tutoring, or digital products, had backup money to survive. Imagine if you lost your main job tomorrow, but still had $500 to $1,000 coming in every month from a side hustle. That income could cover essentials, reduce stress, and stop you from dipping into your investments at the worst possible time. Solution: don't rely solely on your job or investments. Build additional income streams. Start small, but start now. The goal is not just to make more money, but to create financial resilience. Step 6. Control your debt. High-interest debt can destroy your financial stability during a crash. Imagine losing your job while still owing thousands on credit cards with 20% interest. It's like carrying an anchor while trying to swim during a storm. Solution: pay off high-interest debt as soon as possible. Focus on credit cards and personal loans first. If you have longer-term debts like mortgages, consider refinancing at lower rates during stable times. The less debt you carry, the more flexibility you'll have when the economy turns rough. Debt is weight, and in a storm, you want to be as light as possible. Step 7. Stay calm and think long-term. Finally, perhaps the most important step: control your emotions. History shows that people who panic and sell at the bottom lose the most, but those who hold, or even invest more during downturns, often come out much richer. For example, Warren Buffett famously said, "Be fearful when others are greedy, and greedy when others are fearful." Investors who bought stocks in 2009 after the crash saw some of the greatest returns in history over the next decade. Solution: don't panic. Stick to your strategy. If you've prepared with diversification, emergency funds, and safe assets, you don't need to make rash decisions. A crash is temporary. History proves that markets recover and often come back stronger. Market crashes are scary, but they don't have to destroy your financial future. If you prepare with these 7 steps, you won't just survive the next crash, you might even thrive through it. So, which of these steps are you going to start today? Share your thoughts in the comments below. If you found this video helpful, hit the like button, subscribe to the channel, and share it with someone who wants to protect their money in uncertain times. Remember, money is not just about what you earn, but how well you protect it.